Okay, looks like the live stream show software is live. So today, someone I guess who is new to my channel, probably a year or less, not fully familiar with my work, how I've been doing this for over 10 years now, covering, documenting precious metal market manipulation, accused me of not going into the details of how precious metals are manipulated. There are a lot of different ways. Now, there was a story that came out today on Zero Hedge and Bloomberg about a Deutsche Bank gold analyst, a David Liew, L-I-E-W. So he was initially, I guess, charged and arrested back in June 2017, and his trial was occurring, I guess, this week, and he told a Chicago jury that a lot of other, basically all of his other fellow traders were doing spoofing, gold and silver trading manipulation. So let's just go through some of the basics of how the paper price for gold and silver has been manipulated. I initially found out about it through Ed Steer of GATA, Gold Antitrust Action Committee, his free newsletter in 2007. So he was predicting paper price movements for gold and silver, almost exactly the paper price smashes. The difference between then and now is there wasn't as many high frequency trading computer algorithms back then. It's become extremely pervasive now. They can just program the manipulation at different periods of the trading day now. They could just literally program it, whereas it was more manual, I would say, in the past. But also the paper price smashes back then took months, many months, sometimes 6 months or longer, sometimes a year or two, if they were strong enough to recover from, for gapping and filling. That's how bad the paper price manipulation was back then. Now, during the course of 2008 and 2009, there was a lot of crazy games that were played. The silver price was, I think, before the 2008 financial crisis, it got as high as 21 and then it crashed. And most people could not get the spot price for silver. If you checked on eBay or you went to your bullion dealer and you tried to buy silver eagles or small amounts of silver bars, you could not get anywhere near the spot price after the paper price for silver had crashed. However, my friends like David Morgan were buying 100-ounce bars or 1,000-ounce bars, and then they had the connections to go to the refiners and the smelters to go to the refiners and have those 1,000-ounce bars melted down into smaller bars. So smaller bars and in rounds, and then they were collecting the premiums. Also, the games, some of the paper price manipulation games, one of them is the COMEX and LBMA, both drastically overstate how much physical metal that they have on hand. So according to how much metal inventory, how much silver inventory the COMEX claimed to have in 2008 and 2009, there should have been plenty of physical silver to fill a 1-ton order of physical silver. And yet Jim Poplava of Financial Sense NewsHour, PFS Group, he's a longtime money manager show, and he ordered a ton of physical silver, and it took him over 6 months of delivery to get said silver. So this is silver that the COMEX claimed they had plenty of, and yet it took over 6 months to get delivery of. So they play games like this. They do paper price smashes. The paper price smashes, other people have talked about this. The reason I don't talk about this all the time is the gold and silver pumper YouTube channels cover the paper price manipulation of gold and silver extensively. The problem with the gold and silver pumper YouTube channels is after they talk about all the details of the paper price manipulation smashes, then they go and make ridiculous predictions how silver is going to be $500 tomorrow or $500 in the next week or two, or silver is going to go to $1,000 in the next couple weeks or couple months or under a year. One of them, I think, even said that there will be no price on silver because that's how scarce it will be. So there's just ridiculous predictions. So you can get good information from some of these gold and silver channels, the analysts who write some of these articles. However, the problem that they then do is they then extrapolate this information into ridiculous predictions, ridiculous predictions for how you're going to get rich very, very quick buying silver, how you're going to get rich very, very quick buying gold, or how the dollar is going to be devalued to 1/100th of its value in the next couple weeks. These are the types of ridiculous predictions. Now, I'm not saying there are very smart people in the gold and silver community, but you have to be careful with these channels about the predictions. So you can get good information about the paper price manipulation, how at 2 or 3 a.m., The paper prices are often after the LBMA has opened up, and the COMEX has, after the LBMA has, I think, closed, and the COMEX hasn't opened up yet. So they like doing it either at 2 or 3 a.m. or early at 6 a.m., 7 a.m., 8 a.m. There's often a lot of paper price smashes. Normally, these are done on the days of like a jobs report or a Fed meeting or an options expiry. That's when the smashes just absolutely start. No, it says the live stream's still going. It says it's still going. Someone said the live stream ended. No, it says it's still going according to the software here. So the difference between back then, 10 years ago, and even 6 or 7 years ago, and now is that these smashes don't last as long. It doesn't take as much time for the paper price smashes for the price to recover. And I think a lot more people now are buying the dips. They see the problems with the fiat currency system. This was even before the pandemic. The gold bull market had already restarted before the pandemic. Now it's just accelerating even more so. So the paper price smashes occur normally they start around 2 a.m. or 3 a.m. and they can occur at different times. If there's a key economic data like a non-farms payroll or jobless claims or a Fed meeting or a Fed announcement or an options expiry day, when there's triple witching, like multiple options expiry day, that's when the paper price smashes normally occur. You have people like Craig Hemke, you have Dave Kranzler, Ed Steer. You have a lot of good analysts out there, but you have to be careful about the ridiculous about the ridiculous predictions about some people saying that silver is going to $500 an ounce by the end of the year, or silver is going to $500 an ounce in the next year or two. Those predictions are the ones that unfortunately a lot of people in the gold and silver community have been very, very guilty of for the last 10 plus years, where they've been just constantly getting wrong on ridiculous predictions. Now, they are getting right about the analysis about what's happening in the paper price markets, but then they extrapolate that to bad extreme predictions about where the paper price is going. You have to be more realistic about when we're going to see much higher silver prices, the odds of actually, if we get to $500 an ounce silver, we might have a hyperinflation event. And at that silver price, there's going to be a lot of scrap silver, a lot of recycled silver. Almost everyone's going to be trying to sell their silver jewelry. You're going to have a lot of potential new silver supply come onto the market. At triple digit silver, I've said this and I've seen research reports on this, at a high enough silver price, over $100 an ounce, if it stays there, it then becomes economic to start recycling all the silver that's in junkyards, that's in very tiny, minute amounts in electronics and other items, and start taking that out. And right now it's not economic enough to do that. At a certain high enough silver price, it then becomes economic to start draining seawater for gold and silver. So we're mining on the ocean floor, although I don't know if the environmentalists will allow that. Maybe in some countries they will. So you have to account for that, where at a certain paper price for silver or gold, it starts to become economic that more supply will come online. Now, right now, the gold miners are being very, very disciplined. They, at least publicly, they're saying that they don't want to bring on super high cost, marginal high capex gold mines. So that's going to keep the supply relatively in check. So there's a number of other articles out there documenting the gold and silver paper price manipulation. One of the best analysts out there right now is Ronan Manley for BullionStar, and I'll put a couple of his articles. I've cited them before over the last 5 or 6 months. He said how the paper price, gold paper price LBMA almost broke in, I think, March or April, and that the Bank of England had to bail out HSBC Bank, which is the custodian of GLD. He wrote an extensive article on this. It was either in April or May about that, but he has a number of other articles that came out in the last couple weeks. At the London Gold Vault bait and switch as LBMA prepares bigger changes, and the LBMA COMEX collusion intensifies as the Chicago Mercantile Exchange approves 267 LBMA gold and silver bar brands. So he's documenting a lot of this gold and silver paper price manipulation now. Also, the other website is GATA, Gold Antitrust Action Committee. I just don't like talking about all the details of the paper price manipulation for gold and silver all the time because, frankly, it just angers me and it's very frustrating. of all the different games and all the rules changes that have occurred over the last 10 to 15 years. And I'm friends with a lot of people in the gold and silver community. Unfortunately, some of them have made some ridiculous predictions, but there are some really good analysts out there. So if you want to read about, okay, I'll briefly talk about this Deutsche Bank article. So the Deutsche Bank trader, fast forward to today, he was initially, I think, arrested in June 2017. Remember, the U.S. Department of Justice still is supposedly, who knows how quickly it's going to take, and who knows if they're going to actually go after a high level, like upper management, who knows. They're rolling up low-level traders and a few mid-level management guys for a Rico case, which is a conspiracy for gold and silver paper price manipulation. Although the charges are only on spoofing, which is high-frequency trading algorithm, which is like pulling out bids. It's fake trading. So if you go to Investopedia, which is the main definition website to look up for a lot of financial terms, you can look up spoofing in there, and it'll explain what spoofing is. But basically, it's fake bids, fake ass, pulling out trades. It's fraudulent trades that are not actually real trades to fool people. But there's tons of other games that the bullion banks have gotten away with. They can see who's trading on margin for all the commodities. So if you're a small trader, they can see how much margin you have. I've heard stories of stops getting blown out. They can see the order book. They can see who has margins. They can see how much margin people have. And they've just gotten away with so many different things. It's really, really frustrating. They've gotten away with over-reporting how much metal COMEX and LBMA have in the vaults. It's routine. I don't remember the exact year, but JP Morgan was fined by the Commodities Future Trading Commission, CFTC. JP Morgan was fined a really tiny amount. I think it was maybe $1 million fine for misreporting commitment of traders data for their gold and silver trading positions, or gold and silver futures contracts trading positions. And most people don't even talk about that. So it was a tiny little fine, but I'm sure that they got away with much worse than the fine indicated. So I could just go on and on and on and on and on about all the different games that they played. But I mean, if they can claim that there's lots of gold and silver in their vaults that they have to deliver, and then the gold and silver is not there, and then you have to wait 6 months or longer to get the metal, I mean, that's just one of the worst examples. And that's what happened to Jim Poplava in 2008, 2009. He ordered a ton of physical silver. There was supposed to be way more than that in their vault, and yet it wasn't there. So they get away with all different types of games. The problem is the miners. The miners can't publicly, most of them can't publicly criticize. You have Keith Neumeyer, who's claiming that the miners should form a cartel. The problem with that is the refiners. The refiners are the ones who actually send the doré bars. So the miners don't actually make fully finished gold and silver coins in bars. The miners only make doré bars. So that's only partially finished. It's like gold and silver refined down to a certain amount, but it's not refined to the level where it's a 4/9 kilo bar that's going to be shipped to China, or it's a silver eagle, American silver eagle, or a Canadian maple, or a South African Krugerrand, or an Australian Philharmonic, or Australian kangaroo, or a Chinese panda, or any of those nice coins that many of you like to buy and show off on Facebook and on your social media. The miners don't make those. Okay, the most the miners make are doré bars, which are a mix of gold and silver, and then the doré bars, which are giant bars of gold and silver mixed together, are then sent off to a refiner, and the refiner then melts those, separates the gold and silver, refines it further down into higher purity, and then that's when you get the rounds, the nice coins, the nice bars, and the blanks. So the miners do not have the ability, because they're not all the way, they don't control the supply chain. The refiners control the more before the consumer buys it at the bullion dealer. So the refiners would have to go along with not delivering then to the COMEX or the LBMA. Okay, let me just read part of this article and that's it. Fast forward to today, when the former Deutsche Bank analyst David Liew told a Chicago jury he learned how to manipulate gold and silver prices from the two successful senior traders he admired and worked with for about 3 years. As Bloomberg reports, Liew said, quote, Liew, quote, said he wanted to be a team player and make money after joining the bank's Singapore office, so he began doing, quote, spoof trades the way he was taught by Cedric, Chanu, and James Vorley, quote, 2 other Deutsche Bank gold traders who were perp walked in January 2018 as the crackdown on spoofers hit. According to Liew, quote, the senior traders were often placed buy and sell orders they never intended to execute. So there you go, fake trades. So they put in these trades and then pulled them out. So it's like telling your friend, here, you can sit in this chair, and then you pull out the chair and they fall down on their ass. And maybe it's a cheap joke, but your friend could have hurt his back. Your friend could have injured his butt muscle or hurt his back. And yes, it might be a nice few laughs, but it's not really that funny after a couple seconds. Never intended to execute a strategy intended to influence, and plus it's manipulating the markets because you're faking bids and asks. A strategy intended to influence prices so they could reap illegal profits. Well, most of these traders are most of the people that work in investment banks are considered frat boys anyway. So like one of those practical jokes about pulling the chair out might be apropos. Quote, I saw Mr. Vorley and Mr. Chanu do it. Liew, the prosecutor star witness, said Wednesday in federal court. Liew, who has already pleaded guilty to spoofing charges and is cooperating with the government, said he next sat to Chanu in Singapore from 2009 to 2012 and communicated daily on a live video chat with Vorley in London. So the spoofing is only the tip of the iceberg. This is something that Chris Powell and Bill Murphy over at GATA, the Gold Antitrust Action Committee, have talked about at length. Again, I listed some of the other manipulation tactics. There's nowhere near the metal that they claim is in the vaults. So the amount of metal that can be delivered, there's not real audits for the GLD and the SLV. There's questionable amounts of metal purchases. So it says that there's lots of gold and silver purchases going into the gold and silver ETFs, the mainstream ones, the GLD and the SLVs, whereas the Sprott metal trusts have independent audits. And the GLD and the SLV do not, and there's enormous holes in the prospectus. There's an old YouTube video from Trace Meyer before he bought a Bitcoin, where he goes through, you can look it up on YouTube, from over 10 years ago, I think, where you can go through, he goes through the prospectus for GLD and shows all the loopholes and all the different things that they can get away with. They can put in GLD, they can put gold substitutes or things that represent gold. So like gold futures contracts in instead of metal, if they want. That is how wide of a loophole is in GLD. And Ronan Manley says that GLD basically broke in March or April, and that the Bank of England had to bail out HSBC Bank, which is the custodian of GLD, for 167 tons of physical gold. That is how much delivery of physical metal wanted to be pulled out of the system. There is a lot of demand for physical metal to pull it out of the system, especially for institutional money, very high net worth people pulling gold out of the system. So again, you can look at the information from these gold and silver people. They will tell you how the manipulation occurs. They will document it. The problems that I have with a lot of my friends in the gold and silver community, and I'm friends with a lot of these people, and I respect them, is that they then take this information and analysis and they extrapolate it to ridiculous price predictions. And some of these analysts have been predicting that silver is going to go to triple digits every couple months, or silver's going to $500 within the next 12 months. I've been hearing that from some analysts for the last 10 years. That's the problem. Okay, got a couple super chats here before I wrap it up. The Ronan Manley articles will be below the video in the information and description section, along with the full article. If you want to read about how all the traders are laughing in the transcripts about manipulating the gold and silver market. And the testimony that this low-level trader gave to the jury in Chicago this week. Again, there supposedly still is, a U.S. Department of Justice RICO investigation. And normally RICO, they roll I don't know how it's going to play out with the gold and silver markets with this case, but normally with Rico cases, they're slow, but they roll up the low-level witnesses. So this low-level trader, he's testifying, and then a mid-level, he turns on a mid-level manager, and then the mid-level manager works a deal, and he testifies, and then they work this up the chain until they start getting big fish. Now, I don't know if this is going to happen in this case, but that's how Rico cases have played out in the past, but normally they took years. Okay, super chat from Jonathan Howe. He is also a Patreon account contributor, one of over 1,000 per month. There is a lot of extensive research there on the silver mining industry, articles on gold and silver companies, royalty and streaming companies behind the paywall. He says he watched an interview of Rick Rule and Bill Fleckenstein. Their knowledge of the industry is impressive. Can you recommend more people of their caliber? Rick Rule has been around for decades. There is not a lot of people like Rick Rule. There are a lot of people pretending to be like Rick Rule. There are a lot of people who pay a lot who pay a lot of YouTube channels to advertise and pretend to be as credentialed as Rick Rule. So there's Dave Kranzler is really good with juniors. I interviewed Dave Kranzler found Silvercrest Metals at 16 cents. So Dave Kranzler of Investment Research Dynamics is really good at covering junior miners. He has a good contacts list. He asks the management teams before he invests in them really tough questions. He used to work on Wall Street for a long time, so he knows the right questions to ask to look for fraud. So Kranzler of Investment Research Dynamics, there's really not a lot of good analysts up there with Rick Rule's caliber. Because Rick does a lot of the financings for these juniors. He is really good with that. I'm not saying Rick's perfect, because Rick has had some mistakes on geothermal and uranium. He was way too bullish on uranium for many years, so he's made mistakes too. But in terms of his experience and his knowledge base, there's very few people up there with Rick Rule. Another one's Eric Sprott. You can listen to the Sprott Money Radio. That's the only place where Eric Sprott does any interviews. And I know because I've emailed Eric Sprott. I have his email. I used to speak with him in emails. And I've been invited up to Sprott headquarters in Toronto a couple times. They flew me up over the years. So Eric Sprott told me in emails that he doesn't do any more public interviews, really. He only does his Sprott Money Radio with Craig Hemke. So there really is not a lot of good analysts out there. There are a lot of people pretending to be good analysts. There are a lot of people pretending that they have the credentials of Rick Rule, and then they'll go and pump juniors. And then they won't disclose that they're getting paid $20,000 or $30,000 for a research report, or they got paid in stock options or warrants to pump the junior. And then as soon as you buy that stock and the stock goes up, they dump all their shares or their warrants. And then they made a lot of money, didn't disclose it, and then the stock crashes. And it's happening. It's happened with juniors over the last couple months. And no, I'm not going to name names publicly. It's just not worth it. It's pervasive. This is why everyone's like, oh, come up with junior mining stocks. Find me more junior mining stocks. And I tell people you have to be very careful with these junior mining stocks out of Vancouver, because you don't know what types of games are being played by the analysts with the YouTube channels, who's pumping the stock. You just don't know. There is a lot of games. And the higher gold and silver price goes, the more fraudsters will come into the space. And it's almost all the fraud is out of Vancouver. And they recycle. So whatever is going up, if it's marijuana stocks or initial coin offerings or crypto, or it's lithium stocks or it's uranium stocks or it's gold and silver or it's copper, the fraudsters go whatever commodity price is going up. So you have to be very, very careful with juniors. Most people learn the hard way. And there is extensive articles behind the paywall about how to have safe exposure to juniors without buying individual juniors. There's a bunch of articles behind the paywall about that. The royalty and streaming companies, a lot of them, Sandstorm Gold is one, but there are others, have extensive exposure to the junior miners, and their risk is reduced because of their business model. And they do a lot of the screening for you. Okay, last super chat question before I wrap things up. This is way longer. I'm going to have a migraine for 5 hours now after this. Unfortunately, this is how bad my health problems are. He says, "Hola, Jason. I ordered checks the other day. Now I get half the checks for 50% more money. Sounds like stagflation, tax and lie, and inflation to me. Unlike the deflationist with a PhD in some other science discipline who was arguing with me last night because his laptop computer went from 2,000 10 or 15 years ago down to 400 and didn't want to talk about any of his other bills going up. Just ridiculous. Okay, he got half the checks for 50. It's ridiculous how many people believe in deflation. They believe all the government numbers. They must also believe in Santa Claus, the Easter Bunny, and the Tooth Fairy still. I get half the checks for 50% more money. Is this about inflation or cashless or both? Smash the like button." Thank you for the super chat, Anthony. He's also a Patreon account contributor. Thank you for the $7. This is about their costs are going up. Have you seen what's happened to timber prices and paper prices? So the timber price, the paper price went absolutely bonkers in the last 6 or 7 months. So it was a combination of factors. There is more home building outside of the major cities here in the US, but also probably there was Chinese stockpiling. The Chinese government, the Chinese Communist Party, has ordered enormous stockpiling of key commodities. I think they are worried that the rumors going around from leaked Chinese Communist Party documents is that they're worried that the state-owned enterprise Chinese banks will be blocked out of the SWIFT system soon, and they will not have access to dollars, and they will have trouble getting dollars through global trade in order to buy commodities. So that's the rumor that's going around inside the Chinese government now. And so they've been stockpiling commodities like crazy after the commodities crashed in February and March. So a lot of commodities like copper, and the copper doesn't, as long as you can store the copper without moisture, you can prevent the copper from rusting. So copper doesn't truly get destroyed. So there's ways to just stockpile copper, put it in a warehouse. The Chinese are notorious for stockpiling enormous amounts of copper and aluminum and other key metals that they don't need and just putting it in a warehouse. And then that gets turned into like collateral. So it's used very similarly to the games that are played in the repo market and in the Eurodollar market with US Treasury bills, how it's hypothecated and rehypothecated. That happens in China with copper in a warehouse and aluminum in a warehouse. So metals are hypothecated and rehypothecated all the time in China, but the stockpiling, from what I've heard, especially for energy and food security, has exploded. The Chinese government is in full panic mode about stockpiling key commodities, especially food and energy, for the last couple months. And a lot of it has to do, I've covered this with the flooding and the droughts and the locusts. Okay, well, we are almost at 30 minutes. I'm going to start forgetting things, unfortunately. This is just way too long right now. Okay, well, if you want to take a look at the rest of my work, I have extensive articles behind the paywall for only $5 a month for my Patreon account contributors. Otherwise, that's it for tonight. Sorry, I can't do any more than that. I'm going to start forgetting things again in a couple minutes. I'm on 5 different nootropics now to offset the memory loss, so this is as good as it gets for now.